All right. So, thank you for attending today's webinar. So, we are going to have a two session today. So, as you can see the screen, so I will share the screen with full slide mode. So, wait a minute. So, the first part, I'm going to spend about 1 hour, will be Agentic AI powered investment co-pilot framework for mostly the focus on healthcare and life science ventures. So this session particularly focus on investors. So mostly relevance for the investors, mostly for the general partners in venture capital and private equities, and partly for the limited partners. And also you are a founder, and then you are interested in how's the fund like a financing area of the investment is going on, then you can just look at it. And then second part, we're going to more kind of like a fundraising side. So it's the founders is a focus on, but additionally investors also may be interested in this topic. So in the second part, we'll have a guest speaker to share his more than 15 years experience investing and fundraising, focused on healthcare and life sciences. So the part one that, as I mentioned, is a focus on investment side. So we're going to have two topics that how to form and how to operate your investment firm, so particularly venture capital and private equities, and then also how you evaluate your portfolio company more better way. So I'm going to share case studies. So two case studies about the investors. So LeagueMed and G Energy. They are venture capital and private equity. And also, like, I'm going to talk about the how to evaluate startups. So in the point of venture capital, how they evaluate their startup company to be investing. So this ecosystem is one of the South Korean startup that I have a very familiar with. So I use these companies' portfolio to look at whether the valuation, fundraising, or fundraising life cycle can be done using Agentic AI. And then second part, you will see that in a more like once you decide to invest some startup, and then next will be the deal flow. And then particularly you need a valuation. So both sides need a valuation. And also kind of like how to do the fundraising in the meeting of mind. So this side is focused on fundraising and also valuation and deal flow. And also we have, as mentioned, we have a guest speaker. So he will share his insight about the fundraising strategy. Okay, so my talk is based on four white paper that deep dive into each topics. So I already shared. And then if you don't have any my copy, then just let me know, then I'll send you the copies. Okay, so the first part is to that Agentic AI powered investment co-pilot framework for healthcare life science ventures. So transforming venture capital, fund management, and startup evaluation into intelligent, transparent, and collaborative ecosystem. So before deep dive into this topic, that I will briefly introduce the motivation that why I'm doing. So I'm in 30 years in tech industry, mostly high tech, deep tech, health tech. And and mostly working in the innovation and also like I'm a patent attorney, so legal side and innovation and commercialization area. So I work through the whole many different type of the body care industry, also like a different law. And then over the past 2 years, I'm more focused on healthcare and life science area, particularly to using AI and digital technology, they usually call AI in healthcare and digital health. So, and then over 2 years, I touch upon many different type of innovation area and different type of the, like, for example, like from the direct related cares, kind of like a diagnostics and therapeutics and monitoring side. It's like a preventive way. And then also I look at the supporting side, medical device, and also kind of like clinical trial, drug discovery and development side. And then after this, the 2 years, my endeavor, and then I started to interested in that how can I contribute through my experience, over 30 years experience in technology, particularly I'm very expertise in AI and the focus on agentic AI, and also kind of like I experience all different type of the field, and then I decided to like to supporting kind of like ecosystem viewpoint. So I started to looking at the what kind of like a key kind of like challenges or something that I bring my expertise to support. And then I found also like I have many engagement with the startup as a strategic advisor. And then there are several needs for this field, usually the startup in healthcare and life sciences that I have engaged that most two area that I found that they're looking for fund to operating their innovation and also they're looking for the partnership with incumbent like pharmaceuticals or the tech giant or the medical devices company. So two area is most essential kind of like a element for the ecosystem of healthcare life sciences that I define. So I looking at the way actually that based on agentic AI that how can I bring my expertise to supporting and then make more better in this kind of like ecosystem component. So the first topic that I focus on, and then next week I'm going to talk about next topic. But the today I'm going to talk about this kind of like a financing investment side is in respect to fundraising. So the first part is to the more focus on investor side. So just looking at the maybe because I have only in the investment side I only have a 3 years experience and I try to form more private equity for not healthcare in other high tech area. So I have a little bit experience in what is the operating of the private equity venture capital. So I don't know about the detail, but just looking at and the discussion with the several like investors to what would be the looks like the current kind of the in the traditional investment model, the challenges, right? So the mostly they operating manually, right? It's kind of the expert dominated. So manual diligence and siloed data. So fund management require a lot of the information and they need to the up to date all the information. So it needed to be more better rate rather than manual diligence and limited transparency. So especially for the limited partners to make them trust to more invest to their fund. That actually that we need to be more like transparency to bring and regulatory complexity, then I know that the investment company hire lawyers like me, but also like there are better ways actually that the legal. I also like working in the legal intelligence, utilizing AI, so all the regulatory matters can handle in autonomous way by agentic AI. And also the most significant they want is to recruit new investors, especially that I think that the current the like investing market situation is tough. So recruiting new investors and also like scale performance to get more revenue is some challenges. So I'm trying to kind of like focus on this kind of like challenges and then how actually agentic AI can support this. So this is one of my kind of the framework development that actually I'm trying to like for example future kind of like AI direction or future kind of like a vision that I have in mind personally is to co-file with the AI. And then the currently the most to say about is agentic AI is kind of like they're very similar to person to perceive and they reason and that they learn and they're using memory, they're using the tools, and then they self-learning and evolving, and then they act. So very similar to workflow the human expert can do. So that I tried for example, that my expertise to reflect to the AI that whether they can be my co-filer. So I teach them and that they can be support me and that they are my kind of like co-filer for whatever I expertise needed, they support me. I just test for myself for 2 years and I found that it's very good. So I try to do make more systemic way to apply to other expertise. So this is one of the like for example uh that I'm calling AI native the professionals in the future. So this kind of like maybe term like AI native investors. So so it's agentic AI transform capital formation and operation. So I focus on formation and operation. And I found that formation, really I had a time for 3 years. I I just have a very innovative business model, replacing, for example, replacing kind of like a traditional leverage buyout by the private equities business model and then I promote my model and try to get the investment, but I have a harder time. So I know that how much it is difficult to raise of the capital to operating your venture capital or private equity to invest in healthcare. So that's why I'm motivated. And also like operation, like for example, the private equity and venture capital, they compensate by their performance. So the how to increase their performance, right? It's an operation. So I've tried to find out a way to supporting these two sides. So as I told you that the each I'm just operating like a multi-agent AI. So it's kind of like a team. So team of AI. So they collaborate each other. They have their specific kind of expertise and then they focus on their expertise and they collaborate. And then particularly orchestrate by some another kind of like, for example, a team leader, right? And then try to support each other. And then they try to provide the kind of like address the challenges and then try to provide a solution. This is a basic idea, right? So I deferred all the details to my white papers. So I will directly deep dive into kind of like some use case. Right? So through this kind of like a use case, maybe you can see more like intuitive way to what I mean by the agentic AI co-filer to with respect to your venture capital operation and other stuff. So the first one that I'm looking at is the LeagueMed. So for this company, actually, I have a one meeting. So I hopefully some member of this company already in my webinar now. So so actually, I just look at their business model, and then I just look at their kind of like some basic information. So I don't know about detail. So based on that, I just figure out what kind of thing maybe that ADK support. So their business model is usually the crowdfunding. So I'm trying to make as a kind of like their crowdfunding based kind of like forming the investing fund, and then they invest to the portfolio company. So, but the portfolio company actually there was very important law in there. So, so this medtech, this kind of like a LeagueMed connect the medtech startup with clinicals and retail investors. So mostly that the this crowdfunding is usually the small money investment like from $1,000, $5,000. So usually it's a less regulated. So I heard that they register as like a broker dealer kind of the certification. So in you need the stamp permission in state way and federal way. And then they operate this fund as a crowdfunding. So usually it's less regulated. So it does not require like for example whether the investor is accredited or not, right? So it has some advantage, but they only uh depending on the small amount. So they need a lot of investors, right? So they need to attract these retail investors. And then so challenges flat revenue, right? Because they charge through the operating this fund and invest to the company fundraising, and then they get the fee through like some providing this fund to the fundraising company. So it's a flat revenue and low investor engagement, manual compliance. Just to figure out. So this is my understanding. So maybe there may be long, then you can let me know. So and then so I just think about automation, personalization, transparency will be the bring to this business will be kind of like a challenge that address these challenges. So end-to-end orchestration scalability can be enabled. So, so this model is agentic AI powered co-investment for leg model. I just developed very simple kind of like showcase demo. So I just, for example, to provide different type of the type of the address of different challenges, right? So I just developed different type of AI agent, like agentic AI, that as an AI agent to particularly lower this because each name is very intuitive because I just using their law, right? So this AI agent using fund formation agent, very you can value profile, so looking at the value, and then investor intelligence agent, looking at the investor. So I just like the what kind of like law to be needed, right? Compliance. Usually, as you say, the SEC provide a very limited kind of like regulation for the enforcing. Usually is a jobs law that regulate the deregulate to make this crowdfunding is available to the investors and the fundraisers. So and the FINRA rules. And there also like the automatic compliance and monitor campaign optimized targeting. So I will show interactive demo. So showcase what I mean by. So this is not fully implemented. I just to show a snapshot that what if you implement in your the operating fund and what it looks like. So it will be just showcase. But you need this. You can see that the what it be the features that you will expect from if you're agentic AI co-file implementing your current platform. Okay, so I will show you the demo later. And then this is kind of like some potential outcomes. So if you implement this agentic AI, and then for example, campaign duration decrease, investor engagement increase, and compliance accuracy increase, and revenue per campaign increase, or something like that, and the new revenue stream. So, and the continuously improve compound efficiency and profitability. So I will show you a demo later. And then GN's case is this company is another company that actually that I contacted recently. Actually, that they are the traditional the fund. So they focus on the accredited investor and high net worth investors, and usually 80% of public and 20% private. So they are carry of the venture cap, traditional venture cap, and then private equity, right? And then they're operating by the MIT Sloan, the alumni actually, the Ivers alumni. So we discussed about how to collaborate, and then I just looking at whether the agentic AI can apply to their current business model to address their challenges, so that the address challenges is the same thing like because the accredited investors to more attract accredited investors and comply with regulation and then better performance. So that actually that they have increased revenue. So our challenges is a slow LP onboarding and episodic fundraising and static report. So recruit LP faster, shorten commitment cycle. Yeah, that's one I also experienced. Hard to do this. I did manually when I did this one. So I'm gonna think about the best way. So and then boost performance fee revenue. So make it more precision, right? And automation and intelligence. So and then I just come with the idea that how to address this one utilizing multiple agentic AI. So I just elaborate what kind of lore function needed and define it, and then I just developed the demo to show the like a showcase if the agentic AI implement in this current business model, what kind of the advantage they had, right? So I will show you that then you will be intrigued to be understand that what I mean by that the implementing agentic AI in the current business model and formation and operation of their fund and what kind of advantage you can see clearly. So this is one thing that I just potential like outcome, like investor conversion and time to commitment and ARPA and compliance cycle and revenue performance. And so this is provide trust, speed, and profitability. So this is something targeting and demo showcase the how to do. And then I hope to maybe in the future then more like a scalable way to like through like the partnership with this company. So so this is one just show the integrated way like LeagueMed and retail intelligence, GN and institutional intelligence, and then just looking at the entire ecosystem can be increased. Because this is two like and the spectrum of the end, right? One for targeting retail, and then this institutional, right? And there's also is a spectrum of the kind of like investor, and then and utilizing more unified way. So to make it a unified way. So. And then, for example, so I just targeting kind of like a norm for this private equity and venture capital ecosystem to address the most significant question and then challenges and then through this agentic kind of like implementation then different like outcomes. But anyway, because normalized through for example, average impact is 60% engagement plus and reduce of the cycle time and then increase revenue and accuracy kind of thing. So this is one actually that I motivate to have this webinar to get the attention from the investor community and then to find out the opportunity to collaborate over this kind of new kind of framework. Okay, so once you have just assume that you have already formed the investment kind of like the platform. So you have a fund, so you want to invest to the portfolio company, right? And the first topic will be that how you evaluate whether the company will be investable or not, right? And then this is one thing that I just try to look at more systemic way because the reason is over to 2 years actually that I just deep dive analysis of the all different type of the startup and then their fundraising status and who are the investors. And then I will look at the more than 1,000 company in the different level. And just very curious about how they actually select the portfolio company in my view, actually, that I was sort of understanding each startup, the business model, innovation, everything. I was sort of like a patent attorney, their IP and everything, right? And then based on my understanding, and then I just try to understand why some company get the fund, why some company cannot get the fund, what kind of investors invest and why not. And then I found there's some asymmetry. So I think that there is it to my understanding, it's not systematic and they are asymmetry. And so some company funded and some companies is not at all. So what is the criteria they select? All right. So I try to make something systemic way to evaluate. And then fortunately I have opportunity that so somebody shared that here is the one. So, start evaluation that this is a I call PMOIC. It is shared by the investment expert. That I have opportunity to participate his lecture, and then through his lecture, I understand his framework, and then I implementing their framework in my agent AI. Then they can just mimic that what the expert done. So it just a co-filer. So and then if I just design it and then I learn it, I found it working better. So I found that I really want to have some framework because the different type of expert have their own framework to select to evaluate their like investing company, right? There may be some maybe through the pitch deck or some kind of like other information they have, and that they also have in-house analytics, whatever, right? So I'm very interested in kind of like unified way to implementing that one as editing AI co-filer. So this is just one example. So this might be not like applied to us. Some kind of like the protocol evaluation, right? So it's not referencing all kind of evaluation framework, but I just to show you that just for if you have some well kind of like developed through experience and expertise, and then just to make as a framework, and that they can have a workflow, and then I can teach my agentic AI to follow that, and then they can be automatically done. And the beauty of this is that they can for example, a lot of the information is whenever you do something that what I found that is a lot of information data is kind of like some gaps, right? So if you want to just do very kind of thorough kind of analysis, and then you need the very good data, right? And information. Then one of the beauty of the agentic AI is agentic AI is the very popular kind of like function is to orchestrate data or information. So that's topic three that I'm going to bring in the next week about how to manage your data or the information knowledge using agentic AI. But they have a very powerful tool already implemented. So that they can feel if there is something missing or the gap in the data information to evaluate your target investing company, and then they can automatic fill. That's one of the beauty of this one. So PMOIC is a leak Branson. So actually, I just refer the credit for this kind of like a framework. So I just look at his framework and then just to understand and then make it as a agentic function. So I try my agentic AI to follow his framework and then apply to the some target kind of company, the example company I mentioned it, and then I found that it's working very well. So I prove concepts or ecosystem demos that I will do a demo. So you will look at it, what kind of thing. So one of the thing here is that I focus on is dual mind. For example, that I'm just thinking about like how actually the symmetry of the like in this kind of like a process. For example, that the investors to want to know that the startup in the evaluation that they have a mind like whether it's attractive is kind of like risk factors can be hedges or something like they have some criteria and the fundraising side has have some mind so minimum minds to each side know communicate each other so this is one that I found that in the final thing actually two mind meet so founder pitch narrative and the investor evaluation report, they're looking at each other. So a way to actually make a more consistent way to evaluate, right? So I will show you in the demo. So just I mentioned that it's kind of like a more diligence from the episode to continuous reasoning. And for the investors, faster cycle, less bias, and transparent risk charity. And founders, the credible validation rooted and then explainable logic or something like that, blah blah blah. So you can look at it. I will share these principles later. So I just to call for the your participation. So if you're interested in that, I wanna explore this one to with a different type of the investors to learn about what they're kind of like the framework, and then whether the develop the co-filer with respect to their kind of framework. So that's one I really wanted to explore with the in the investors. So if you're interested in, let me know. So actually, that I was showing the one of the part actually that the two other demos actually in here. So in the part two, then what I'm going to do is a same company, but once you have an evaluation and you need a deal flow, so there is a valuation. Also like a fundraising meeting of a mind. So each companies are matching each other kind of thing. So that's one I'm going to share maybe in the demo. Okay, so I will stop here to my presentation and then I'm going to show you very briefly about demo and then I wanna discuss with you. Particularly, I'm very interested in hear from you. You're expert, so I want to know about what you think about my framework and then is there any other ways actually that I can improve it or there are other ways actually that have some kind of like to interact with the potential collaborate to implement this framework, right? For example, I just invited someone, the life science venture capital that I met in the local meeting, and then explained my framework, and they just said I don't believe AI because the hallucination whatever. So I said yeah that's where actually I'm looking at it. I'm expertise, and I found that the way to in the future to like coexist with AI is a co-partner. So I bring you a co-partner and then you oversight everything. And then he was very kind of like pessimistic about this kind of framework. It told me maybe 10 years later, something like that, right? So anyway, because I need all kind of different critique or whatever, right? But anyway, because I'm tech guy, so I love to innovate. And then I don't know because this kind of framework maybe game changer or some other way actually that there was something I'm missing or not. So I just learned all demo this morning. So I'd like to show very kind of like essential kind of thing. So this LeagueMed investment co-founder just to show in that I make framework in my ChatGPT. So this is all like perform in the prompt engineering way. But actually, that I also have a business partner. So actually, I'm promoting one of the my business is to designing Agentic AI for different purpose, and then actually we implement in a like a commercial platform. So we need a cloud infrastructure, any kind of like a tools, and also like software, anything that if you want to be commercial in the scalable way, but still you can have a snapshot demo utilizing prompt engineering inefficient, but anyway, it's good way to give you insight. So I will show you my prompt engineering way to the demo. So see, this is the Agentic AI transform healthcare fundraising. So into an intelligent, transparent, continuously learning investment ecosystem. So the LeagueMed is platform operating through the specialized agent. So I just look at their platform, like crowdfunding platform, right? So and the specialized agent that handle onboarding, valuation, investor matching, compliance, and performance optimization show you, right? So and you can learn this one as if you want, for example, that the founder and investor are side, right? Because this platform is kind of like the ecosystem of the community of the founder and investors, right? So you can learn this agentic AI to supporting two sides, right? Because each side, right? Because the best performance is done by the like a synergy between two stakeholders. So you can learn either like a startup, like evaluate its fundraising readiness, or the mostly the medtech startup is a revenue source. So actually the kind of like relationship with the fundraiser is very important. Also like investor, like a retail investor, like in the crowdfunding. So you can learn either side. I will show you just one side. For example, that investor. So it explain everything. So that first one is investor discovery engagement, right? So it try find out the investor and then try to get a track and then to bring engagement. So so have a special kind of agentic AI doing some agentic law. So, for example, that as Dr. Emily Carter, a cardiologist interested in remote monitoring, show me personal investment opportunity, right? So investors to kind of they also are interested in the particular innovation and then particular like a startup they want to invest. So they want to find out the whether there is good opportunity to invest. So they bring their money to this fund so that the agentic AI support this process. So the system reasoning investor intelligence agent analyze your investor record. So looking at the investor and find out their profile and then catalog, their fly investment record or whatnot, and also like interest, right? So they're looking at the investor profile to understand. It's kind of a perception to call agentic AI. And then you bring into like in investor intelligence agent welcome to interact with provide through the investor's intention needs one, and then it bring about some kind of like good company actually to be invest. So if they attract, they put their money, right? So it provides some through the kind of like existing database, and then they provide good information about it, right? And then so it gives you the opportunity to deep dive into more like each portfolio company to their interest, right? And then they're looking at it. So just to skip this process. So this is actually they're doing in live. So it takes some time because of the ChatGPT. Uh, Expand the investment discovery, agentic activated, and then kind of like so it's a diversified investment discovery by analyzing adjacent meta tags that has a particle with a strong growth and patent-backed information. So it just provides the alternative opportunity to like a strong kind of like a return expected one. So communicate with investor that provide more opportunity like that. And then also same thing. And then and then just go back to cardiology startup, right? and then already matching it, right? And then so it try to support you kind of like how much do you have a kind of like attractiveness chat based on your needs and want, right? And then it give you kind of like whether the which company actually the more interesting or not, right? So this is very simple one, but this is the one thing that the better way to interact with the potential investor to give more information and then have a, like a very a reasonable reasoning the why you need to invest, right? So this is very simple information, but anyway, so and I will show you that another one, maybe. So this is the one I mentioned, the G Energy. G Energy is a traditional, the private equity and venture capital. So they 80% public and 20% private. So it's kind of like a hybrid. So they hinge on the traditional limited partner, the accredited partners, right? So they highly depending on their founders and managers' expertise experience, right? And I know that the two guys on my MIT Sloan line, they are very excellent in this space. That's why the investors trust them. So I'm just to bring more kind of like better way to attract investor and then doing better perform utilizing agentic AI. This is one example that if you bring AI profile and how much they can support. So, so fund manager side, right? Because the performance side, investor personalized, explore personalized investment opportunities, something like that, right? So, so for example, that the investor side, they wanna bring more investor. So it give you the it's a very similar, right? It's the current profile, the most relevant AI and technology fund on the G Energy platform is not specifically healthcare. They invest in all type of the AI. So they are focused on AI. So it took about the relevance AI, including AI and healthcare. So AI and tech focus fund align with investor profile, risk tolerance, and fiscal profile preference. So, so traditionally, that just for example, they provide through the investors about their pro forma that the what the fund performance and then what the managers and what kind of like investment fund operating something like that, right? It's a very written information, better limited one, but it's better rate actually the more plentiful kind of like a transparent information bring to the investors to clear understanding of this operating of the fund and the performance and what kind of like their the investees looks like so that actually they inform the decision making. So it a way to actually increasing their investor like a limited partner investor. That's the logic. So it's just to try to do that kind of logic through the agentic AI. And then so they wanna looking at the particular kind of like fund and their fund kind of like operation and what their like a performance of something like that, right? So so for example that if they set up one kind of like existing fund and then they provide like a very detailed information. So you look at it. So I'm not going to perform anymore because of the time limitation. But you see the sense, right? What will be the agentic AI bring to your investment firm, right? Dealing with investors, dealing with your portfolio company and performance operation, something like that. It depending on your needs, want, and your like business model, right? And also, so this is one actually the evaluation side. So, Oh, this is a LeagueMed. Okay, so co-filer G. Oh, this is no. This is valuation. Oh, this might be. Yeah. So this is one I will just show that how that I show the sub framework, how you evaluate your startup, right? So I already launched. So for example, that I show you one example. You can choose any one example, but I will keep consistent with my presentation deck. So I pick up the company that I show you. This is a startup, and then startup scenario info. So it kind of like it's starting from the pitch deck or some information about startup you want to evaluate. So the Excel system, it briefly talk about everything about it. And then the problem making, and then so it looking at the based on the profile of the year startup company to whether it's invest or not, and then it looking at the market, like exactly the same thing that you pitched it, right? Because verify the market, right? And then what kind of like, for example, then one or two evaluate. So that I already explained the PMOIC scheme is the one that I bring the local expert to the evaluate. So if you have your own scheme that I can bring to here. So it follow the PMOI's framework, and then you find out what the risk level and then explanation. So it's explained about every step, right? Because the beauty of this is that in the reasoning decision making, that this AI is not black box. They provide all the explanation how they decide, and then based on the scheme that kind of like continue on the external benchmarking at get filling so that to find out if there is a gap in the information, and then I mentioned they try search and then find out the relevance information on that. Then so it output. So output means that evaluation report. And then based on evaluation report, what kind of like pitch deck will we bring to the investors' attention, right? So it's a dual line output, right? So the investor evaluation report, and so like a founder pitch deck narrative, right? And then it give you the I can produce the very detailed kind of like exact summary of the report, and then you can download the PDF one. This is the essential. So, and then I will be in maybe in next session, I will continuation of this portfolio company and how to value, and then how to meeting over mind each kind. For example, starting from the like fundraising side of the needs one, who might the potential investors. There's a meeting of mind each side. So that demo maybe I will spend in the next session. So we only have 10 minutes. So actually, what I want is hear from you about your insider comment. So we have 10 minutes left. So I'll stop here, and then I hear from you that you're inside or what a comment or whatever, right? Please share yours. Anything you want to have a comment? Anyway, because if you're interesting to collaborate with me to implementing your side of the business model, then I welcome. So uh, whenever later that you feel interested, just contact me and we can discuss. Randy, do you have anything?
I'll participate.
I,
I would say the biggest,
I like your kind of comment, right? Because
my comments.
you see this, right? For the first time, right? Because you look at the white paper that
Yes,
I showed the demo, right?
correct.
Give the snapshot, right? Because what it really looks like, right?
Well, when I see something of value, I stay focused on it. I think a lot of what you have to say is very valuable. Because I see the biggest benefit is that, this allows the startup to really focus more on their growth, and it makes them more efficient.
Yeah, and so like have more opportunity to the capital, right?
Exactly.
Yeah,
No,
that's when I
exactly.
want to bring the like innovation and efficiency and kind of thing in the ecosystem, right? To have a more symmetric way and more transparency and more kind of like a proper way to support, right? And then
Sure.
there are more like accessible capital to the innovator, right? Because that's why I find that because I really have some through my 2 years experience and analyze that there is an asymmetry, right? It's unbalance in the capital flow, right? That's when I wanna the
Sure.
to
And
address. Yeah.
it improves the chances of them securing funds. I think
Mm-hmm.
that's a big one too.
Mm-hmm.
You know,
Anyone?
you know me, I'll talk to them.
Yeah. Okay, so then maybe we will start the second session. So if you're interested in the more kind of like a fundraising side, so you focus on more like a portfolio fundraising side, and then we will stay here. And then we have a guest speaker. So he has a lot of experience. Actually the his expertise is he's also a PhD in life science. So he understands in the science and background, and also like more than 15 years in fundraising investments. So I'm not here because because AI can replace you, right? That's the that's the philosophy, right? Because what I show you is supporting co-filer, right? So I need expert, right? Expert views and expert experience, whatever. Right? What I'm trying to do is to develop co-filer that just to follow that expert, right? Support co-filer, right? So I really want to hear the what the expert have in experience mind. So that's why in the second session that the human expert insight is very important, right? So we will resume and then we'll restart at 1 p.m. And then if you want to stay and then just bring your coffee and then you come back at 1 p.m. And so hope to see you again in about 7 minutes. Okay? Thank you.
Ugh.
Okay, so it's time to start the second session. So again, so I
Hey,
already
Alex.
introduced you in the session one, so you can start right away.
Okay. Okay. All right. Let me just pull everything up and start sharing my screen.
Mhm.
All right. I'm gonna put this on full screen mode. Give me a second. Presentation mode.
You need to first share your screen.
Yeah, I know, but I'm just trying to make sure it's on the correct screen. Okay. All right. Let's see. Now I'm gonna start sharing. There we go. All right, we should be good.
Yep,
Am I on live?
yep,
Okay,
good.
awesome.
Yep, you can start.
Great. So happy to have you all on this call. We're looking to cover ensuring that you know how to fundraise like a pro. And before we jump into it, Alex has spoken to you about me a little bit already, but I'd like to give you a quick intro as to who I am and what I do and what Higgs Insights does. So essentially, as the principal of Higgs Insights, what I do is provide strategic guidance for launching and growing healthcare and life sciences ventures. We like to think of ourselves as McKinsey, but for startups or a really effective accelerator. And so what we do is we prep documents, whether that's a pitch deck, one pager, financial model, providing market research report. And then once those are done, we essentially focus on getting you investor introductions. And so we consider ourselves to have a value proposition that is prime. So we're proficient, we're rapid, we're innovative, meticulous, and effective. That's the team there. There we also have a few subcontractors in US. We also have a team ex US. We can move very quickly, very efficiently, and very professionally. And so this is going to be important for you because in this environment, raising capital is hard, as you will see. And so even for great companies, you can find that the majority of them will have difficulty and will struggle in order to raise beyond the seed stage. Having a breakthrough technology just isn't enough. There's so many more components that go into a successful raise, and you really have a very short time window in order to grab the attention of the investors, usually within the first 30 seconds, this 30 to 60 seconds, really. What you need to do is then provide clarity, proof, and conviction. And so, in order to do that, what you really want to do is ensure that your narrative is matched to your investor's mental model. And so we'll cover that here. So, for instance, if you're in the biotech sphere, then you need to make sure that you're adhering to the sorts of slides and the sorts of the expectations of biotech investors. If you're in digital health, that's a different type. That's a different audience, and so you need to make sure that you're matching their expectations. Same thing if you're in devices. And so the risk tolerances vary. Of course, some like biotech have a longer regulatory pathway, and so you have to have a high risk tolerance to be involved with that. Others, such like med devices or med tech or health tech, you can often have a company that is revenue producing quite early, and you can see the traction, and it's easier to invest in something like that. And so, however, when you think of your strategy, you also want to think of the types of investors that you're focusing on. So it can be VCs, it can be strategics, it can be angel investors, it can be family offices, it could be high net worth individuals. Like there are different types of investors. So what we do at Hayes Insights is we like to make sure that we tailor the messaging to the audience. And so we have connections to various investors in different of different types. And so we like to ensure that we target it based on what we know certain types like. All right. And I'll maybe cover some of that now, but a little bit more later. So investors want to see different things at different stages. That's right. So whether it's seed, Series A, Series B, obviously, the further along you are, the more that they're going to want to see in order to make sure that you are tracking progress properly. And so what you want to do is ensure that you can do that, and ensure that you're at least in this market. You want to be a stage or two ahead of whatever stage you're actually in. So if you're in pre-seed, you want to look more like a seed or a Series A company, right? Your deck should be professional. You should have your team together. You should have your stuff unlocked. Your due diligence should be a nice, smooth path, but with a nice financial model with updatable assumptions and that sort of stuff. Researching the fund focus and recent deals is essential. You want to make sure that the funds that you're talking to, have invested or had exits recently, right? So if they had exits recently, then they will have funding available for more investments. If they at least invested recently, they may still have a little bit more capital available. We have means in which to assess this. Of course, you can look at things such as PitchBook. We have proprietary tools very similar to that that allow us to see who has invested recently. We can span it over the past year, the past 2 years, the past 3 years, whatever, even a few months if you wish, in different verticals. And so, in addition to having all this together, you want to make sure that your story is simple and bold and investor ready. And so, you need to make sure that you nail your whys, like whether that's why now, why us, and then the market timing. You need to ensure that your documents are clear, as I have stated before, and lead with that clarity, not just with science. Then you want to use visuals and analogies to explain complex ideas. You may take some examples from what you see even in this pitch deck that I'm presenting to you here. So you also want to ensure that the data is the proof and the story is the sell. So in short, you have data, sure, but your story is what people are going to remember you by, right? That's how you build trust. That's first of all how you build rapport, and then ultimately how you build trust, and that's how you get investors. Right now, as you might know, investors back people that they believe in, right? So investors, I've heard many investors say they don't just bet on the horse, they bet on the jockey, right? So they bet on you, they bet on the founder. Ultimately, also they bet on the team that you compile, right? So showcase milestones, particularly if you only have limited resources. You want to be able to showcase how you've hit your milestones still. Also, you want to add traction, show validation, and testimonials where possible. So this is important. So whether that's traction in terms of outreach to potential clients, outreach to potential partners, and of course, if you have it, outreach and potential traction you've already had with other investors, please do also include that. If you haven't done an equity round, or you haven't had much equity funding put in as yet, then you can also, if you started earlier with non-dilutive funding, you can talk about your non-dilutive funding that you got, the grants that you got. If you have a family and friends round, talk about that. If you put in money yourself, also put that in, because that'll show that you're invested. And that's what they want to see. Someone who's invested in this, not just doing this for a quick win, or thinking that it's going to be a quick win. And so ensure that you highlight any repeat founders. If you have founders on your team, if you have people on your team, and you're either on your executive board or you're in advisory board who were previous founders, had successful exits, make sure to highlight that. If you yourself were a multi founder, if you had exits previously, be sure to also mention that because that's going to be important. Highlight domain experts and key advisors, particularly if they had positions perhaps in companies that you would see as potential strategic partners or even potential clients, right? Be transparent about your risks and your mitigation plan. The best way to lose trust is to hide particular information that could be detrimental, or could sway the investor. It's not so much about presenting that information that would derail their interest in you. It's how you present it and how you thought about how you're going to mitigate any sort of risk associated with it. And so you want to be very thoughtful. Of course, you don't want to shoot yourself in the foot, but you also want to ensure that you're transparent and that you're open and honest about what you're doing. And so the next thing that you have to know is your market. You really need to know your market. So prove that you understand the market better than anyone else. And this is where the market research would come in. You can either have a separate report or you can bake it into the same sort of documents that you're creating. So your pitch deck should be based on some market research. So know your competitors, right? Of course, there's going to be a competitive analysis slide in your pitch deck, especially the do nothing option, right? There's always some opportunity cost to doing nothing. Identify payer, reimbursement, regulatory or channel friction, because your regulatory pathway is an important element of what they're going to assess. Every investor in this space is going to have that in their mind. Be ready to explain how you will scale efficiently. And of course, you need to know your TAM, your SAM, your SOM. Estimates must be realistic and sourced. They don't have to be perfect, as we'll talk about a little bit later. They don't have to be perfect, and it may turn out to be different, and you may actually iterate on it and change them with time. But you do need to have something that's realistic and backable, right? It's not all about what you say; it's about how you say it and how you back it up. And so the financials don't need to be perfect, as I said before about the SAM, the TAM, SAM, and SOM. They just need to be believable. Series A and B investors typically want a 5-year story, but I've worked with founders where we've just given them like a 7-year financial projections, just so they have an idea. It's just a little bit more comprehensive than what would be anticipated, but particularly in certain fields where your runway, where your path to revenues and then ultimate profitability is longer, you might want to give them a little bit longer, but 5 years is typically a good place to start. Use clean, logical assumptions in your model. I can't tell you the importance of this. Also, what you want to do with these assumptions are make your model dynamic based on these assumptions. So if you include these assumptions up front, the way in which we create our models, if you take a little, if you decide after a meeting or two with a few people are starting to say this assumption is off or this isn't relevant for this particular vertical, you can tweak them and your entire model changes. In fact, we build our financial models to the point where you can tweak it right in a meeting with the investor and the model will just propagate and show the differences. That's how we build it to ensure that it's the most useful to you. Unit economics should align with the go-to-market strategy. So make sure if you're pricing something out, the base cost price extrapolated by volume should give you close to essentially what you're saying you can ultimately earn through either selling if it's a particular product or a particular service. And it should align with, let's say, what you see your serviceable obtainable market being. It shouldn't be more than that, obviously. And show a clear use of funds roadmap. They want to know, investors just really want to know what you're going to do with their money, right? Of course, they want a return on it, but how are you going to generate that return? How much is going to go into marketing? What's going to go into operations? Like whatever the breakdown is, make sure you have something in place that they can see that makes sense, both to you, that's reasonable and fair to you, but also makes sense to them. So you might not realize it, but the moment you come under scrutiny, you're already being under due diligence to some extent, right? So your diligence starts the moment they Google you, whether or not this could happen before you even meet with them, right? If you're on their radar, this could happen. So it's very important with what you're doing, particularly with your social media presence, and also with any sort of documents that you share. Was that someone had something to say? Okay, I'll continue. So be ready with a data room and organized files. Make sure you have that all together, ready, and it's comprehensive and complete. Use citations for market and tech claims. Don't just state things without backing. Ensure that you have sources that people can go and can verify the information that you state. Expect tough questions on team. That's super important. That's one of the first things I tell my clients to ensure they have together their team. IP, that's the moat, right? That's the basis for your competitive advantage and the ability of competitors to be able to come back and catch you up. So your IP is important. And your runway, how long can you last without funding it? Under your current amount of funds, how long will you last? How many months? And so expect tough questions on that and be ready to answer. Once again, it's not what the answer is, it's how you deliver the answer, what the rationale is behind how you would deal with that. And that's what's going to be more important. Have credible references and or advisors lined up. So be ready to be able to direct them to people who can back you up and back up your story, and that who they can actually believe in based on their background and reputation as well. So many startups lose funding due to preventable missteps. I'll tell you, I was at a conference, BioFuture conference. I was representing a client 2 weeks ago, New York City, and on the first day, I was on the Revolutionary Oncology Therapeutics panel. So we gave a talk, presented the client, gave a talk, and I stood around. I had a few partnering meetings with a few investors on behalf of my client, but I was able to attend a few, not too many, of the other meetings, and two of them really stood out. So on one meeting, I think it was either Tuesday or very early on, when I think it was Tuesday, Jessica Federer, who's the managing director for the Women's Health Fund, a board member of Angelini and Ventures, which is like a room-based fund, was asked a question by someone in the audience on what's the best thing that we can do? How can we increase our chances as a founder of getting funding in this market? Like how would I approach you as an investor? And Jessica said, I hate to tell you this. I know it's hard, but the best way to get my attention is through a warm introduction, right? I know it's hard for you to get, but a warm introduction is the best way. So I tell you, and she continued, she said, if a fellow investor or someone I know comes up to me and says that this company is like really legitimate and you should look into this, I'm going to be way more likely than otherwise to invest in it. And I found this myself, and I'll tell you why I tell you this. If you think of it from metrics wise, you can think these are rough metrics. Give me a few seconds. Hold on. But rough metrics. If you think of, let's say you reach out to about 100 investors, maybe, and I could, since you all have the option to actually weigh in and speak. If you reach out to 100 investors, how many of them if you reach out to them cold, how many of them do you think would probably invest in you? I'll for the interest of time, I'll give you my assessment. If you reach out to 100 investors, you may be lucky if you get a 1% hit rate. However, if you get a warm introduction, you increase that likelihood by 5 to 10 times, right? Depending on the nature of the investor that you're connecting with and the nature of what you're doing and how far along you are. So what Jessica said is very important. At that same conference, one of the penultimate talk, Jessica was on with a few other investors, including Michael Langer, who is the managing partner of TRX Capital, son of Robert Langer, co-founder of Moderna. And so someone asked him a similar question. It was like, okay, what can we do? What is your best advice on getting investments, or to what can we do to ensure we have a better chance in this market? And his response was, reduce the obvious dings against you. And then he said, and this is his language, so pardon my French, but he said over 50% of founders that he's come across have shitty decks. He said, there's no need for that, right? Like, find a consultant, find a professional, get your deck spec'd out. That doesn't mean you with a spec'd out deck, you automatically get investments, but that's one less ding against you. Another thing that came up is make sure that you have a team that has either experience and ultimately also potential to raise and can help you with the raise, because fundraising is a team sport. It's not an individual thing. Of course, you want someone to be able to spearhead it, but you ultimately want to be able to have a team working for you. And so I'll synthesize some of the insights I got from that conference and also from my work, and say you want a team. That's something that we advise people on even before we engage. You want to have your documents together, whether it's the financial models, the pitch deck, the one pager. If you need a market research report, that sort of thing. That's something that we do. We do it under a very quick time scale, very efficiently and very comprehensively. And you want to have warm introductions, which is something that we are able to offer to our clients who are already far along with the other aspects of it. We tend to make sure that you have all your documents together first and your team together before we do that. So this is all something that we offer. And so avoid preventable missteps. It's very similar to what Michael said. So don't over-engineer the product before testing the need. Poor deck design and messaging, as I already mentioned, inflated market claims or weak financials, and failing to engage warm intros and referrals. Let's say you get warm intros, ensure that you engage, make sure that you follow up, right? And so, as I mentioned before, founders who do it rarely do so alone. So your team is important. Your internal team is important, and sometimes you might need additional help. So Higgs Insight supports with pitch deck, one pager, and model creation. We deliver crisp, investor-ready materials really quickly. We've helped raise millions across biotech and medtech already. And we also help with investor targeting and warm intros. So if you'd like to learn more about any of that, please let me know. Let's make your next raise the one that closes. Right, so we offer tailored support from seed to Series B, no fluff, just strategic clarity, sharp design and insights, fast 1 to 2 week sprints for document preparation with 2 revisions to ensure your investor ready, 3 to 4 month engagements for warm investor introductions that have high return on investment and guaranteed meetings. In order to take advantage of this, you can quickly scan this QR code right now and book a free strategy call today. And just note on the call that Alex referred you. Put Alex's name down as a referral once you fill out the form. I would say, based on what we have here on the call, we may be able to pull the first 5 or so that come. We have bookings, because my calendar only goes out 10 days. I already have some calls pretty much booked for between now and next week. But if you have a problem, if you don't see a spot right now, check back in a day. and the next day will be available for you to book. So that's what that's it.
Thanks, Kat. Yeah, fantastic. I learned a lot. So, yeah, could you out from this sharing that I can share my slide and then I will
Yeah,
keep
sure,
going on?
absolutely. Yeah,
Yeah.
yeah, absolutely.
Yeah, I will quickly go over my presentation about 20 minutes and then we'll have about 10 minutes in the Q&A session.
Awesome.
Yeah, okay, so first I'll share my screen again. So I stop in the demo. So actually, I will keep going on. So second part, actually, Get provide very good about what is mean by fundraising, what you need. The one point actually that I mentioned in the session, the part one, was to the meeting of a mind, right? So the as your fundraiser, what you want to do, what you propose, and what's your side of the information, anything. And then also like investor side, right? The investor, the purpose of the financing, and the type of the some science and technology. So and then stage, right? So the most important factor is a meeting of mind. Each side match, and then you have a kind of like a more chance to get the fund, and then you have more chance to have a good portfolio company to invest, and then have a good performance. So I will continue on my this agentic AI type of the that in the session two that I'm going to focus on fundraising side more. So first one is so uh so founder's dilemma, right? So as mentioned that the asymmetry in the opportunity of fundraising kind of thing. So mostly that in the first part I already show you that the framework to using AI to evaluate the startup and then starting from kind of like pitch deck, right? And then through this interaction that you will be have a evaluate your the company to be whether it's investing potential or in the through in a different way actually that you will have a elaborate your more pitch to actually to have a meeting with the mind of the with the investor that they're targeting, right? So once you have a decision making, and then next step will be the deal flow, right? Because valuation is most important, especially early stage startup in healthcare and life sciences, no revenue generation, any kind of like business activities, and then it's very difficult, right? Because and also like most of the kind of like the asset to evaluate at the valuation will be intangible, right? And then not yet committed, like realized, right? So the complex valuation is a problem, and so valuation and regulatory IP, actually the gadget get already talk about some of the evaluation step and regulation pathway. IP is clinical data is one of the things that I'm a patent attorney and in New York City attorney, so I was supporting my client to have a strategy in IP. So recently, I supporting two health tech companies to develop their IP and file a patent. So also like this is will be the one of the factors to be contribute to your valuation. And negotiation is another deal negotiation and kind of like a barrier for valuation logic, something like this. So that's why I motivate that it may be very useful to have some AI tool, right? Supporting you to supporting have you to through your complex valuation and also like have you to like obtain your the fundraising goal. So just to give you that it will be very technical because I'm for me I'm as the pattern attorney, but actually the traditional pattern attorney is not much rate valuation, but actually I have another credential that I have if you have a look at the LinkedIn profile, I'm called CLP, is a kind of like a certified licensing professional. Is another credential that the expert to grow and you pass exam, you have a credential as a CLP. And then most of the part of the CLP expertise licensing deal and valuations. That's why I have a lot of experience in IP valuation and is kind of like an intangible asset. Also, like I personally, I also have a lot of information, engagement in the tech transfer. So in the tech transfer, you also kind of like expertise in technology valuation. So that's why that even if I'm not a CPA, but I took the kind of like some educational training that usually they call certified valuation analysis. That's the CPA actually they're more interesting in more like a professional valuation, kind of like a consultant. I took the course, so I'm a little bit familiar with this topic, but you don't need to do no detail. But anyway, because this is very detailed, kind of like expertise required. So usually that you hire some valuation expert like me or other, right? And then so, but actually it can be make you a little bit easier, like to easy your pain, kind of like a pain in the neck in the valuation stuff. So I just provide this one. Actually, I have a lot of experience, intangible experience, but not much in the early stage of life science, kind of like healthcare, startup valuation. So I just follow this one. Someone expert actually they mentioned that someone actually that I have attended some of the investors kind of like summit, and then I like have opportunity to have a 1 hour like a lesson for about how to value it. So I just take that and then I put in my agentic AI and then just mimic. So it give you that very beautifully. For example, I will show you a demo that some company and then give you like what kind of like the valuation is very good to you, right? And then it give you like a kind of like when you're doing like a negotiation of the how much equity you share through the, like money value, something like that, and it have you. So it have both sides, the investors and then the fundraiser. And the financing side is another approach that is starting from the fundraisers needs one. So they have their portfolio, right? Because their asset, innovation, all kind of thing, they know good. And then they have some expectation of the some investors may be interested in their kind of like a state of the art, and then they want to looking for who might have a more better chance to invest to their company. So this is a kind of like a meeting of a mind, two side, and then starting from the fundraiser side need, and then try to match the what kind of investors maybe interesting to invest. So it give you that insight. So I will show you demo. So I mentioned that I show you two sides. Like for example, that I'm looking at the like financing of the healthcare and life science, and then the ecosystem stakeholders are original investors. They call limited partners, like a family office or the like endowment or other kind of like the personal investors, right? They put their money to the venture capital or the private equity, right? They call general partners, and then they utilizing their fund, and then they find out the good investing side, like either that usually the startup, right? And then also like depending on the like stage, they have an alternative way. But anyway, because mostly I focus on startup, and then so stakeholders are the LPs, GPs, and then startup, right? So in that ecosystem stakeholders at the viewpoint, I try to provide like some mechanism utilizing agentic AI support to address their challenges and supporting, for example, in the LP side, that, well, where they put their money, right? So they want to look at the more transparent and the more like a systemic kind of like information they can make a decision to invest in the specific fund. And they're like operating the person like general partners, venture capital, and then they through this fund actually that they looking for a good investment side, right? And then they through this one, and they charge like a fundraising for the kind of like operation fee, like a performance fee. Also, some of the company actually that I met with LeagueMed, their business model is utilizing crowdfunding to kind of like to from the like retail investors to put their money, and then they want to be the cohort with investor and the company in the platform way. So I just provided one. And so like in the fundraising side, that how actually you looking at the investors that have been interested in you, right? So I just coined the term co-filer, right? So it is support you. So I really want to collaborate with you that hear from your experience and any challenge and something like that. I find out how the agentic AI can support you, and then I develop some framework and then collaborate with you to implementing and actually apply to your everyday practice. Okay, so that's my presentation. I already show you that uh so I think in the first part actually I show you my full white paper. So I think that I already show you, but if you don't have any these copies, just let me know that I'll send you this full, very default level, kind of like a narrative white paper, but explain every detail about what I've talked about it. Okay, so then I will show a demo quickly. Okay. So so I show you that three demos before that the supporting your fund operation and fundraising side, right? Interact with LPs and then interact with the portfolio company and then how to operating you to supporting you. And also like in the first session, I show you that investors mind and then they evaluate the company starting from the start of the pitch deck, right? And then in later, as I mentioned that, and then in the two mind, right? So it'll be give you the like investors evaluation report, and then through this one actually the how you reiterate your pitch deck. Okay, then I will show you about the valuation, right? So, this is one actually that I show you that one the Korean startup that I show in the POC demo. So it'll give you the how to value, right? So framing the valuation framework agent. So I show that I have a multi-agent, have a special function from, right? So it targeting all this stuff, the partial regulatory validation. So they have a like a, MFDS is a counterpart of the FDA in South Korea, and the FDA still is pending, right? So there is something risky in the FDA compliance pathway, and then they have a like a 10 million Series A, right? And then there is a market, right? And then sort of like licensing there, right? And there was like some market performance, and then so they want to be side of the like whether kind of like a SaaS recurring revenue, right? Because they want to value through their kind of like some kind of like their revenue generation potential or other things like that. So maybe just to pick up one, right? So it gives you the Palma licensing kind of thing, right? So most of the it depending on, right, because usually licensing model is for if you're in Palma biotech startup, right? So usually that in the early stage, even if they have any production in the market, usually that they want to be like licensing out their IP to through the big pharma, right? So this is one thing that targeting it. And then I mentioned that my next webinar is about actually how you have this kind of like a partnership with kind of like a big pharma company or other medical device company to have a like a it contribute to your valuation, right? Because yesterday I've been in one conference, and then I'm looking at what you're challenging us. A lot of the company in the usually biopharma is they want to be good news. the good news means the big deal with the big pharma about the license out their IP, right? And all, even if there is a Series A or the early stage or the some of the company in the Series B or something like that, still they don't have any good news through like licensing out. So I'm going to do supporting this one is another way. Actually, there is another the supporting agentic AI supporting the healthcare ecosystem. So, but anyway, because they utilizing this kind of the valuation, right? So it give you valuation. So then it's the benchmarking or not and no. Then so it give you everything that provide to sure that you use every information you need, and then you will give you that the current snapshot summary, the startup input, right, through that valuation framing, and then give you like a simulation and they give you the valuation range, right? It did give you the consensus with the venture capital, and then you can decide with like how much allocation of the year asset, something like that, right? It did give you a try to have you. Okay, then final one. So what is this now? Okay. So this is a final demo. So I will use the same company that it's starting from the fundraiser side. So as a they has an input, right? So it understand the profile, right? And then it give you that what the profile to show to the investors. So okay. They try to give you some snapshot of the profile of the your startup, so it better understanding. So agentic AI try to understand you, right? And then try to find out the potential investor matching with your profile. That's a basic. So it understand, right? It understands everything: market, technical, regulatory, execution, and then investor. So it based on yours, it try to find out the investors, right, to match with you, right? So it can get like for example, the best way actually the pre-research. So I just mentioned that one of the powerful function of agentic AI is to search over the information and gather insight, and then provide a good database. Usually they call lag the the technology that assure the information is correct. So that's one I actually have another resources that I can bring into the actually implementing all kind of different applications. So it has expertise in agent AI to know what kind of the investor available through like literacy search or the database search, whatever. They provide a profile already, or maybe in the newly search over based on the company's portfolio understanding, right? Try to find out the potential investor match with company's profile. This is a basic kind of thing here. So it find out that the based on your proposal or your profile, it try find out the matching of the best candidate investors may be interesting in you, right? So it give you the candidate, and then matching score, the how much it is potentially. So you look at the very different type of the matching mechanism, right? And then find out who might be the best candidate. It give you that it explains that that's why I mentioned that the agentic AI, the beauty is that they provide explanation, right? Because it's not breakfast. Every reasoning is based on ground, and they give you the explanation why they choose and why the percentage of something like that. So it give you every detail about behind the scene, right? And they give you the quantitative way, right? Why they the good investor to you may be interested in you, right? And then after that, they give you negotiation, destruction, everything that you needed in kind of like the negotiation deal or whatever. So it depending on the how you design that what kind of like challenges, everything that your workflow, your needs one can be designed. So it can be designed, right? So I designed this for my own understanding experience. But anyway, because I need to discuss with many other people and stakeholders to make this one better, right? That's my purpose of this webinar, that I have a need with connect with a lot of people and stakeholders in this space. And I want to communicate with them and learn a lot and then make a better design of agentic AI that I have in target in mind, right? So it's kind of thing, right? Because and even in the feedback and then you learn, I mentioned that it's self-learning. It is getting more and more smart. That's why they have a more interaction with the expert, have a more like experience. They will be learn better, right? Because they're getting smarter. It's a beauty of the agentic AI, the self-learning. So just to introduce you that I already experienced how much it is powerful, and then particularly in this kind of healthcare, life science investment and the financing ecosystem, they will contribute a lot. So I need one to you participate with me to have some co-file, share with the expert, and then designing the new agent AI for you, and then we can test it, and then it will give you the efficiency and then transparency in the financing investment market. So therefore, more the fund will be operated for the innovation. That's my purpose. So stop here. So we have about 13 minutes to go. More have a Q&A session or the share your insight or whatever. Right? Okay. So if you have any question to me or the guest, or have any comment you want to share your insight, just to please let me know. Yeah, Linda, you can talk, right?
Yes. I just wanted to share that. I'm not if the group has saw that there was a deep tech collaboration between the U.S., Japan, and South Korea. I believe it just occurred.
Mm-hmm.
So this is just going to like accelerate the use of this technology,
Mm-hmm.
and it's probably gonna, I guess, put some safeguards on some things that are occurring. But I believe it's just gonna make our system just change everything around. And for the people who aren't going to get in touch with like technology, they're
Mm-hmm.
going to really start to struggle,
Mm-hmm. Mm-hmm.
unfortunately.
Yeah, because you have a good point. Because I attended the recently about that was a meeting about the cross-border kind of collaboration in Pharma Bio, and then there was a talk about like the crossover investment and the crossover collaboration for example clinical trials, right? Example that the example was to like because of the for example the biopharma they need like three times of the clinical trial phase one phase two phase three, right? Because a lot of time and cost. And then there was someone suggests like for example South Korea for the phase one clinical trial is much effective and cost effective and good because the South Korea has a lot of the good hospital to explore it. And then you can come to the United States for the second phase. So I just raised a question about the cross-border like compliance compatibility or kind of like interoperability. We need to be have something. And also like for example crossover fundraising or crossover investment, like there is a LP as mentioned the stakeholders LP and like a GP and then fundraising side, right? And then there is
Yes.
also like a financing market is regulated, right? Because I mentioned that the two company like operating in a like crowdfunding, they regulate it as like they register as a kind of like broker dealer. And the other company, the private equity, venture capital, they register as a private kind of like investor, like under like the FTC the regulation, something like that. So all the funds are actually regulated in the crossover. There is different jurisdiction kind of thing, right? So
Yes.
that's what I definitely did. I say that the agentic AI intelligence to looking at this complex situation, right? And then they can handle over kind of like handle a lot of the complexity, right? Their AIs are better than right than in the complex data handling, right? So that's what I suggested then. So I think that you give a very good point, right? Because yeah, that's what I also want to explore. Yeah. Yep. Gad, can you can you talk about your insight or comment? Or Jim, are you still there?
Yeah, just following up on what Gareth brought up earlier. Well, actually, the top of his slide on the upper left sounds idiotic. There were a lot of content and a bunch of slides he showed us. You could almost say, well, what was the only word out of the entire deck that mattered? It was the upper left of all of his slides. It said trust. And so, having worked before as a consultant for companies like IBM and having sold, I'll call it very expensive solutions to companies, the the trust problem today gets worse, not better. So when you go in front of an investor group, you have, who knows, a wide range of people in terms of their background, not only what they're looking for, but their understanding of what you're bringing and putting on the table. And so he made the great point. Yes, you have to, I'll call it simplify your messages, and you have to bring them down, make them non-technical. The problem is in that audience, kind of like this audience, you have varied backgrounds. Some people are going to have more knowledge, not less, about AI, as an example. So in an investor presentation, what makes it a little more complicated is if somebody's sitting there and they understand something about AI, they're going to recognize that there's a larger, not smaller, trust problem with AI for sure. So AI adds trust problems. It doesn't solve them as much. So it's not that it can't be used. Like we use AI in fraud detection, things like that. So it does serve a purpose. But the concepts of AI and how it works actually adds lots of trust problems. And so sometimes in a presentation, if you have an audience that is more knowledgeable on AI, you may have to address that as a big challenge during your presentation.
Yeah, yeah. That's what actually also like I have a comment about or I have a kind of like experience to join as a judge to the startup pitch. And then as exactly you mentioned that I'm very familiar with the AI, right? As an expert. So whenever somebody talk about AI, that it's depending on the whether you're the expert in AI understand as a judge, right? Or the investor. You're looking at the pitch is very different, right? So I have very high expectation, right? So the one pro is that I understand what the pitch side talk about it, right? Because I understand every aspect of the AI. But another the con is that I'm too much understand, so I have a high expectation, right? Of that, right? Or someone actually they're not much tech savvy, but they're more like based on their insight about the hinge or whatever, right? But they also have what I found that they have their own like it's not based on scientific analysis, whatever, but based on their experience with the contact with a lot of the pitch over the AI, a lot of people just put AI, right? Everyone just put AI in their pitch, right? And then they have a sense that whenever they talk about AI, they have a common like a screening to over like how to understand what these guys are talking about, right? So yeah, that's one actually that's why that I really have like implement that kind of like the mind of the like investor to the agentic AI, and then they can handle the complex situation, complex different of mind, and then they will be more better in the objective way to handle the kind of situation, right? But anyway, I need to talk with more people to understand what are the investing mind, right? Anything you want to share? Anything?
Yeah, hello. I'm Petrus here. Just another comment, I guess, on the same directions. Yeah, first of all, thanks for your time here, everyone. But yeah, I agree with Jim that it's one of the problems with AI nowadays is really hard to assess, and understand what can happen and what can bring value, right? It's because everybody talks about AI and it's so much disrupted. So, and in order to create a product, of course, AI is like hot and says, but helps discussions, but it's not necessary to use an AI model or algorithm, right? So the way going back to the people that understand the technology, and I think there is from what I'm hearing, because we're in early stage and trying to see how we can get to a point to have the necessary sources required to have a team. Um, so there is a missed gap, to my opinion, between to the people that know exactly, but there's not a way that you can prove everyone before you actually build the product. If it has to be innovative, it has some certain complexity. We can present it simple, but it has a certain complexity that you need time and team and resources, right? You got to put hours, billable hours, and a team to work and build it, and to be reliable. So I think I think there is a gap there of how can you get some trust. I would say yes, federal agencies like non-dilutive SBIR grants is one, but I can see the trade-offs of more time consuming. So I just want to hear how's everyone's thoughts about.
So, Petros, I'll jump in on that.
Yes, sure.
I have a company right now. Um, I don't want to characterize them as insane. That would not be nice. But their expectations are, I'll call it out of the ballpark. So they're trying to get funding for something they haven't built. And the problem is the founder, in a sense, doesn't understand how to move forward at all. So he talks to all these vendors. He has a concept of who a client is. He has a concept of what a solution is. Yeah, the solution uses AI and all that stuff. The problem is he's off the rails on thinking he can present PowerPoint decks and get money. So that to your point, you got to show something along with the decks in theory if you're actually looking for real funding. So the idea of getting what we call phase one SIBRs, kind of disappeared with the last administration, which all you needed was a PowerPoint deck to get that kind of funding. That's not here anymore. So what you really need to do, and he he gets all confused on what he's got to show. I said, look, let's not look at the whole ecosystem of what it takes to operate your solution. That's not the point. The point of it is if I said I'm not going to buy your solution, I'm going to buy something else, what are you going to tell me that's unique about your solution that makes it better than the competitive solution I would buy today? Do you know what I mean? I made him answer that question, and it only came back with 2 points. So I said, okay, this is what you're going to have to show, just the 2 points. You don't have to make them, in a sense, in a production environment. You have to demonstrate that they actually function and produce a result. That is not a production environment necessarily, but those two functional points that say, this is why my solution is better, you have to demonstrate those somehow. And that provides a level of, I'll call it confidence and belief in the part of the investors that if we gave you the money and if you have the rest of the things that were shown earlier on what I call that roadmap, if you can sell the rest of that with those key points of difference, then you have the valuation metrics that says, okay, if we, going back to the market model that says if we actually had a production version of this, what percent of the addressable market or our obtainable market, I should say, would we be able to achieve at each stage in the roadmap? So it's what's in the first 6 months, the first 18 months, so on. Build out, those milestones and say, okay, if these two features were in production and I had something, We have a marketing model that says this is how we want to connect to that obtainable market. With all of that in place, you might be able to convince investors that there is a way to go forward. But the key to it is just show the functional differences and what they actually produce. Just that, not in a production environment. That's my take anyway.
Yeah, yeah, no, I'll definitely. That was the direction I was trying to message, and thanks for commenting this out. And yeah, in various probably ways. See if you can have a collaborator that is willing to do a pilot and fund you. That's, I would say, one of the ideal scenario. But if you can also put some personal time and build something, um, that can also be, in a situation that you can do that, it's ideal. In a situation you have to stretch. I mean, you have to have. I agree with you. You have to have a functional part of your MVP that showcases the uh, advantage compared to your competitors and does something new that adds some unique value that doesn't exist maybe yet, and makes a difference. So very great point. Yeah, no, I agree on that. Thank you.
Thank you for everyone. It's so fantastic actually that I spent 2 hours. I'm exhausted now. Okay, so I will share this recording after this event. And then I also like to share my presentation. Gad, are you going to share your presentation also? Maybe I will talk with Gad and whether he wanted to share that we can combine them and then we will share the one presentation with you. So, and I hope to see you as my collaborator later. And then also like I hope to see you in my next webinar. Next webinar is about how to do partnership, straight partnership, licensing out, licensing in, and clinical trials, everything that how you connect with a big pharma, medical device, big giant tech company with your startup. So it'll be a good topic to you if you're interested in. Okay, so thank you for attending today's webinar and I hope to see you later and then also be collaborate with you. I welcome anyone to participate my exploring the co-filer to make this healthcare and life science ecosystem better. Okay. Thank you. Take care.
Thank you.
Thank you
Bye-bye.
so much.
Bye.
Have a good
Bye-bye.